Hey folks, it's Simon here. Welcome to your Tao Daily for Tuesday the 7th of January 2025. Let's just have a quick look at what I'm seeing on the S&P 500 for short term and medium to longer term. So in the short term, we've got some positives, we've got some negatives. Let's get the negatives out of the way with first. The first negative is SPY, so S&P 500, is in a short-term downtrend. All right, the very definition of a downtrend is a symbol that's making lower highs and lower lows, and you can see that is what's happening here. That was the all-time high, made a low, lower high, lower low, so far a lower high. Let's see if this trend line continues to be respected. And then looking at the moving averages, we just don't have trend structure. All right, we don't have rainbow logic, and that just leads us to be pretty non-committal about short-term direction. We do have a couple of positives. One is that we've got 6 bullish divergences. This is on my divergence blueprint indicator. 6 is a number that I pay attention to. Right? If I see 2 or 3, don't generally get that excited unless it's accompanied by a strong setup. But when I see 6 or more, the market will usually respond to that. And look, it already kind of has responded. Maybe it's got a little bit more optimism in the tank. The reason I say that is the second positive, and that is seasonality. So this is something I share with my Accelerate members each month in the Market Barometer. Seasonality for this week, the 6th to the 9th of January, is bullish. Now, bear in mind the 9th of Jan, the market will actually be closed in observance of the death of President Jimmy Carter. But notwithstanding that, the seasonality this week is bullish. For the final 3 weeks of January, it's a bit more of a coin toss. So if that sounds a bit like I'm saying the market could go up, the market could go down, you're spot on. All right. So what I do in this sort of an environment is pare back overall risk and just focus on really clean setups on individual symbols. All right, because we haven't got a strong bullish signal or a strong bearish signal from the market right now. Now, the longer term signal I want to draw your attention to is this one. So what I'm showing you here is the 10-year 3-month yield curve. Now, when this line on the top part of the chart is below this red horizontal line, that shows the yield curve inverted. And of course, we've had a long period of inversion the last couple of years. What I've highlighted with these golden rectangles is periods of normalization after an inversion. And what typically happens is the S&P has a bit of a tough time. Now, it doesn't necessarily result in a tech wreck or a global financial crisis, but it can certainly result in a flat to down year. Doesn't necessarily result in a COVID panic either. But what you'll notice is that this has normalized again. The question we need to ask ourselves is this time going to be any different, or could the S&P be headed for a pretty volatile 2025? My money is on a volatile year. This has been a very, very reliable indicator. It is fired. But by the same token, this could take weeks, if not months, to play out. But I think it's an important thing just to be aware of. That's what I got for you today. I hope it helps, and I wish you good trading.